Hi everybody, this is Dennis Wilborn, founder of Active Trend Trading. Thank you for taking the time to watch this free video that we do every week. It is a video where we cover the markets. We also have oftentimes have some trades that we might be setting up that you might want to take. But I want to ask you, before you leave the page, as you watch the video, just give us a real quick thumbs up and share the content with somebody else. Leave us a comment. We'd really appreciate that. So aloha, God bless, and mahalo. Hey, good day, everybody. This is Dennis Wilborn, the Active Trend Trader. Welcome to today's session for how to make money trading stocks, options, and ETFs. I've got several stocks to share with everybody that are working their way onto my watch list. I want to say thank you for attending this session. Of course, this is our free session for active trend traders and anybody who else wants to join. We try to keep the session 15 or 20 minutes or so. But if you are joining us via either Facebook and or my YouTube channel or anywhere you may be seeing this, video, please feel free to share the content with anybody you choose. And also give us a thumbs up. I know there's a lot of us engineer types out there that don't like to give people thumbs up, but hey, do a fellow engineer or a fellow techie guy a favor and give us a thumbs up and leave some comments. But above all, just share it with everybody. Let's get jumping right over to the session for today. Let's see if I can plug myself. And if it won't plug, I will come back. I'm going to kill my video for just a second and get on to the rest of the session. Good afternoon, everybody. This is Dennis Wilborn with the Active Trend Traders. Welcome to How to Make Money Trading Stocks, Options, and ETFs. So remember that all materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. As a reminder, part of housekeeping, if you have any comments or thoughts, please leave your comments in the chat section. That's the only part that I monitor. I do not monitor the Q&A portion of the webinar. And so again, just leave any comments, questions, whatever in the chat area. If you just want to say good morning, say good morning. I like it when people say good morning to me or aloha. Let's get going. A lot of stuff to cover today. Here's a little bit about myself and my son who is working with me with active trend trading, a little bit about what we've done, and there, of course, a few years ago, Michelle still looks the same. However, yeah, I'm a little bit grayer than I was then. And there's Brandon and his family up in Boise, Idaho. Hey, remember, discipline is the key that turns knowledge into wisdom. I really, truly remember believe that, especially when it comes to something like trading. Trading is a skill that everybody can learn, but it takes time. People may look at trading and go, oh, well, that's got to be simple. Wait till you put in your first order. Basically, when I was first learning how to trade, of course, we didn't have all the awesome, power programs that we have now to be able to trade with. It was literally almost call your broker or do it on your cell phone. Fidelity used to have an app on the cell phone that you could do it, but it was prone to make mistakes. And some of the earlier aspects of trading online back in the early 1990s was really amazing, because remember, we all had those dial-up modems that would go king, 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 king. Anyway, let's get on to today's session. That's what we're here for. Hey, the objective of today's session is timely, actionable intel review at the end of each week, seeking to clarify and simplify market decisions so that wealth can be multiplied, so that our wealth can be multiplied. So as I look at the market going into the close today, what next? Okay, we have China talk expirations that are going on with the talk about potentially extending that. We have the president about to declare, a state of emergency so that with the wall on the southern border can be constructed. We have a lot of things, and the reason I mention that, regardless if you are for or against what is being done, just remember that the majority of what we're hearing and seeing in the market right now is noise. And news noise is a catalyst, and it moves the market. We have just a few earnings sessions to go before the end of the this particular earnings seasons. And so that's going to be a less of a tension point for the markets. And we're going to get back into just news noise catalyst. Let's move along here. So here's where we're sitting as of up about 1.4%. The indexes themselves have done really well for the year, but remember to look over here that this is how far they are still down from the highs of last year. With active trend trading, I basically just try to add a little bit each month, and by the end of the year, we typically, the markets will come out somewhere, 18, maybe 10 to 17%, and active trend trading has averaged 31% over the last, since 2012. And so I know that if I just keep doing the same thing over and over and over again, it's going to work out well. So let's get strategic here. There's a beautiful shot of an F-18 taken off from the carrier down below, doing carrier quals, and that's what I used to do for a living. It was a lot of fun. However, it's no game for an old guy like me. So hey, let's look at some charts. Okay, I got a weekly chart on the left, excuse me. That is my anchor chart in this case, and I have a daily chart on the right. Typically, I'll be looking at the anchor chart for, okay, where's the major levels of resistance? And as you can see, what I've identified for the and as you can see, what I've identified here are a couple of points along here, here, and here that constitute this level of resistance at about 281. That's where we would anticipate on this continuous grind higher, where if the market is going to show some reluctance to go any higher, that's probably about where it would do it. I would say anywhere from where it's at right now up to the 281 was where we'd anticipate the market at least taking a breather, because this has been a very exciting move up off this bottom, a V-type bottom, that's going to basically gone straight up with very little resting, kind of gone straight up here. So we need some kind of a little bit better pullback into the moving averages, which in the case of a weekly chart would be back down, pull back at least into the 270 level before proceeding higher. However, we may push up before pulling back. So that's always something to consider. What are the some of our indicators telling us? Very interesting on the daily chart, the TSI is putting in what could be a head and shoulder. You may not know what a head and shoulder is, but typically a upside head and shoulders, this would be considered a bearish head and shoulders with the anticipation it would break down to the downside. We're also getting a little bit of negative divergence between this high and this high. And now what that tells us is the momentum that pushed us up to this high here was greater than the momentum that pushed us up to this high here. And it just means that as the market pushes higher, it's doing it on less momentum, which means if the momentum totally dries up, it makes the susceptibility of falling that much greater. Let's take a look at our buddy, the Qs, which represents the NASDAQ. Similar type situation on it. It is also pushing up into past resistance. We have a breakout. Now again, we want to be looking at the Qs and all the other entities for trading, any type of a pullback into the moving average. We had a really, kind of a nice pullback that we started off on last week, bounced off the 100-day moving average, and then continued up. And as I said in last week's session, this week is monthly option expiration week. What tends to happen is we get a upside push on, or basically a bullish bias on the monthly option expiration week. So again, similar type situation here with the TSI. Even though the TSI is looking like the momentum's coming out, look over here. It's not in sync with the weekly. The weekly is still pushing up the new highs and still showing some strength. Again, we are approaching a level of resistance on the Qs at this high right here, which is up at 173.31. So take that. IWM really is, you know, they say that the Russell leads the market up and leads the market down, and it is continuing to push higher. Again, there is no negative divergence on the TSI on this case. Weekly TSI continue to push higher. The, you know, everything looks in gear for the Russell, represented by the IWM, to continue pushing higher. Look for a potential push. I'm sensing that we're going to probably get a push on up here to the 160 to slightly, you know, to about the range of, let's say, 162.50 level. And so if you do want to jot those down as potential levels of where we could anticipate a, you know, stronger pullback, that would be a good area to look. If currently we're back in the mode of pull back to the 8, pull back to the 20, and then bouncing from there, primarily just the 8. So watch it this week. We're getting a little bit extended away from the 8 based on last week's move or this week's move. So it's not going to go too far more untethered away from the 8. And when I say tethered, typically things revert to the mean. And we look for a reversion to the mean to the 8, the 20, even the 50 and the 34. And those are our lines of demarcation where that's where we want to plan our trades around, those particular levels. And we are continuing to do that with active trend trading. And then I want to throw out a couple of, I'm going to hit several stocks in a rush to glory here. One, CYBR. A couple of things that CYBR has done here over the last couple of weeks. One, it has done a real fine breakout, you know, with after earnings. You can see that on a, come on. We see that here's the day of earnings or the day after it launched up here, broke flat, flat, you know, it's flat to the top above the 100 level. Now 100 is a psychological support or resistance level. CYBR has now broken through that. What do you want to take a look at? I've got a week. Yeah, we've got a weekly here. So the anticipation is what I would like to see happen is I'd like to see CYBR pull back into the body of this candle. It would be nice if it held 100 because that would tell us that 100 was a strong level. What do I want to do in the case that doesn't? I can either buy the stock or I can do an option trade on this particular stock. I really, you know, like this entity. Again, not buying it where it's at, but if we can get some kind of a pattern going on here or get some kind of a bounce at the 100 level, that's where I would look at saying, okay, that's a great place to get in. That's one. And the other reason I like CYBR is because it has weekly options. When I analyze stocks, I prefer, it doesn't mean I do this all the time, but I prefer to trade stocks that have weekly options. Why? The reason is because a stock that has weekly options tends to be a very active stock. And secondly, if I buy the stock itself and buy at least 100 shares, I then have the ability to do some option trades around that can help, you know, ensure the success of the trade. So CYBR is one. Another one right now, I think it's not right now media, but now. similar type situation. Broke out after earnings, has not given us any, sense of a pullback. I would have loved to have seen a pullback back down towards the breakout area. And so it's just continuing to proceed higher. I like it, but it's not in a buy spot, but I want to have it on my watch list. The other one is your old buddy, Netflix. If you can start learning how to trade some of the aspects of Netflix, if you're a subscriber of Netflix, you actually pay for your subscription. Hopefully, do better than just paying for your subscription. Did you notice that they raised their rates? I think they're up to $14.95. Is that correct? You Netflix guys out there? So what's this telling us? Okay, one, it has gotten up to a resistance level. We are tracking. Look at everything. The price action is all above all the moving averages. Well, where do we want to potentially stake our claim for a line of demarcation? Probably somewhere between the 8 and 20 day moving average, which is basically this is the 8. This is the 20. I expect some kind of a pullback into that area may give us an opportunity to get long the individual stock. Doing kind of a nice little. Now, actually, on the bigger scale, if you're a IBD trader, what do we have going on here? We got kind of a double bottom kind of thing going on here. Hold on. I'm trying to get these because I want to show you one other thing. Done kind of a double bottom thing. Low, low, high, back down to low. Now, as soon as it takes out this high, which is that would mean that it was a successful double bottom. You can also look at an early entry, and that's already flashed an early entry right about there to the double bottom. Now, that is not a classical double bottom. Classical double bottom, the two bottoms are closer to the same level, but that is an IBD double bottom. Okay. One that a stock that I'm going to be looking at very closely, BIDU. BIDU has earnings coming up on 2/21. I'm trying to lay a position in on that currently to buy some BIDU calls going into next week. It reports after earnings on 2/21, and then its running mate Alibaba. Again, if we get any good news out of the China trade talks, both things like Baba, Baidu, some of the other Chinese stocks could do really, really well. Nice looking pattern. Prices are above the moving averages, which is all good. So we're looking for a pullback into the stronger moving averages, the 20, the 34, or the 50 for a potential bounce on BABA. And then the last but not least, PayPal. I use PayPal for my business, and it's been a really nice little package. PayPal, there we go. Again, PayPal. PayPal has earnings coming up on well, we might be able to see that. There you go. It just had earnings too. Yeah, it just had earnings here. So we're past earnings on it. And so just watch any pullback back into the moving averages for a potential to get long PayPal. It launched out of here. It has broken out above this past high here and is now holding that. That's about the 95 level. And we'll look for it to push higher, but I'd like to pick it up off of the moving averages themselves. Now, why do I bring all that stuff up? Okay, those are the stocks I'm watching this week. I wanted to share that with everybody, get that out of the way. And why is the other reason I bring that up? Well, one is we've been running our strategy 2 session with we started this strategy every year with $10,000 worth of trading capital. As you can see, this is the profits we have made on this account so far. And I aim this particular strategy with our premium membership for members who have a smaller account or just basically want to take like $10,000 or $5,000 and utilize it to learn how to trade options. And we're primarily doing spread strategy. My objective with this $10,000 account is to gain somewhere between $500 to $1,000 per week. $500 to $1,000 per week doing spreads on it and that type of thing. What I will be then doing is as the account compounds, we will, that number, of course, will increase. But so far, year to date, we got started on the 18th of January doing this particular strategy. We've generated $1,900, a little bit over $1,900 in profit, which equates since the beginning of the year, if we took all the 6 weeks that we've gone through so far, about $333 per week. So if you want to learn more about that, or hey, come and be a premium member with us, and we'll teach how to do that particular strategy. I like that strategy. So what else do we have here, my friends? Let's get back over here. Remember, January, February, March on the indexes tend to be a little bit sideways, and we'll see if that continues. Then as we get people going into the 15th of April, getting ready for taxes, they start putting more money into their 401ks, and that tends to put us onto a buy spree on NASDAQ. Crude oil tends to get a little bit of a fall back in the midsection of February. We're in the midsection of February. What's crude doing right now? Crude is starting to climb. We'll be watching that moving forward. Hey, if you want to see the BAM meeting, please join us on March 2nd. I continue to do clear and simple trading rules for the BAM, and we prepare for record profits and how. And what we also teach is how to use the IBD 50 successfully. If you want to get in touch with me, you can email me, dww@activetrendtrading.com. We do premium member training every Wednesday evening at 6:30. And that's about it. Hey, I just want to mention one thing. We are getting close to the end of having any charter memberships remaining in the Market Action Point service, which is a different service than after trend trading. What we've done is basically we've pulled together a service, done the back testing, worked on it really hard. My son Brandon did the majority of the technical analysis on this. We came with a system that basically offers couple of things. One, major signals. This is where we get our major bottoms, averaging 26% per year on the back testing. It provides somewhere between 2 and 7 alerts per year, major signals, but we've combined with that to make it better. Also, secondary entry points that are based on, we used to have a service that would, do something similar, but it didn't, have this many trigger points, and it did not take into consider opportunities to trade both to the upside and the downside. And this one, the new Market Action Points does in fact do that. It does, on average, 3 additional trades, and it averaged about 12.96. Where you see the real power of this kick in, guys, is on the compounding. As you can see, here's a map, here's a chart of 2017 IWM, and this again, with IWM is what we did our back testing on. As you can see here, the compounding effect of the major, Market Action Point majors was 9.73. Didn't quite beat the Russell. However, you start throwing in these other opportunities to trade, and what we did on these other opportunities, to keep it very conservative, we kept a tighter rein on it. We had a smaller objective target to get out of the trades. And so, but by itself, it added another 11.14% in compounding. You combine that, the two of them. And again, this isn't a promise that, hey, this is exactly what we're going to get. But as you can see, but if we trigger towards that, even if we only achieve, 13%, what's the Russell did, we're trading the leveraged ETFs, guys. And so that's 13 times 3 would be what this would have done. As it says, this would have been about 75% on a 3 times. So, hey, if you're interested and would like to find out more information, you can go here to this website, theactivetradingtraining.com/maps charter intro, and see a little video that we put together to explain. And again, we are running out of charter memberships, so go and check it out. So that's all I've got for today, 2019. I hope you like getting all those stocks, shotgunned at you. Pick a couple that may be of interest to you. And if you want to learn how to do the strategy to become a premium active trend trader. So, hey, keep the egg growing, trade wisely, trade profitably. There I am on Facebook. There, Active Trend Trading is on Twitter. Here is my email. Here is my phone number. Hey, so for premium members, we will be jumping into the final hour here shortly. And with that, I just want to say aloha, trade well, and prosper. Have a great weekend and an awesome President's Day on Monday. So enjoy your 3-day weekend. Aloha, everybody. God bless.